It is time to take a very calm and collected approach to the stuff going on in this market. Today I'm going to be covering with you guys what has been happening with Bitcoin, but really more than that, I want to take a step back with you today, ladies and gents, so we can really think about what's actually going on. This is actually a very simple, rudimentary chart that I drew for you guys many moons ago, potentially, but it's just literally just indicating that Bitcoin could end up doing this for the next little bit. And I told you this at a time when everyone and their fucking grandmother was losing their mind thinking that the market was going to crash down to like 20k and stuff like that. And I did this with a perspective of, hey, let's fucking breathe, relax, catch your breath for a minute, bro, and let's talk about what's actually going on. Because what we actually have here and what has held on so strong for Bitcoin for quite some time now is rock solid support at the $25,000 area. Now, we knew this was rock solid support on the $25,000 area. If you were watching this YouTube channel, shout out to those of you that are. Smash up those likes. You already know the deal, because this area gave Bitcoin some very clean rejections off the 25k area. Not only did it give clean rejections, it also gave those rejections that ended up taking Bitcoin way lower, minus 37% on this occasion here and minus 23% on this occasion here. Both of these are pretty big drops. Not only that, as well, it was also tested across time. This area was relevant for more than 6 months as resistance. So it's no fucking surprise, guys, that we're not falling below 25k. I don't understand why people lose their minds so quickly over stuff like this. The fact is, Bitcoin has held on to this support incredibly well so far. We've actually done nearly the same thing that we did last time. Right off this level, how big did we pump up? Plus 28%. If we pump up from here, if we're going to get something like a 38%, kind of like we did to the downside, we're looking at some really juicy price targets in the mid 30k region. And the only reason we won't do that is because you're scared. You know what I mean? Like, that to me doesn't really add up. Now, here's the thing: we gotta kind of take a few steps back and apply some nuance here. The issue that we're faced with right now at this stage in this market is that we are looking a little bit heavy. And that's kind of the only thing that I'm seeing as negative on this chart. Now, fundamentally, economy, inflation, interest rates, whatever, things are pretty bad. Climate is pretty horrible. Yes, I know you don't have to tell me that. But if we look at some of the, again, it's the difference between, and this kind of says everything, really, doesn't it? It's the difference between, like, the group of people here that want to be scared and that want to fucking, I don't know, just jump on whatever bandwagon exists and just be a complete idiot and, be a useless trader. There's those people, and then there's the people here, the camp that you and I are in, which is just like, hey, what do the numbers say? All right, people talk shit. News headlines talk shit. YouTubers, Telegram groups, Discord, everyone's stupid. What do the numbers say? This is where we live, you and I. And if we look at the S&P 500, which is one of the best indications of where speculative money is, it's clear that speculative money is flowing back into the indices markets, with the S&P 500 here, with the NASDAQ index, with Germany's DAX even to some extent, and we can even go to the UK 100. All of these are not performing horribly, and certainly not performing as horribly as you want them to, but the S&P 500 is the star of the show here for my point that I'm going to make with you guys, which is that we're still just not in an environment where the numbers are reflecting the kind of fear that we're seeing across the space. In fact, I went as far as saying on my Twitter page, which you can find linked down below the like and subscribe buttons, linked down below, the over $100,000 in bonuses you get on BingX, which is a no KYC exchange, great for privacy-minded people, access to stocks, forex, indices, fucking crazy. You can trade Tesla on this thing without KYC. It's the craziest offer ever. Go check it out. What I said on my Twitter page, which is linked down here, is that 25k is really starting to feel like $17,000. Do you remember the fear that everybody had? If you guys were here back then, just let me know in the comments. Do you guys remember the fear that everyone had when we were down here, and just kind of fucking around? No one really knew what was going on. That's kind of how I'm starting to feel about what's going on right now, just from a pure sentiment perspective. And the only reason that I'm bringing this up to you guys today is because of what is actually happening on the chart. It is because the fear that I'm seeing does not match up with the fact that we're at a support level. It was the same thing down here when I entered my massive long position that you guys knew very well about. I was taking some really nice profits on that position. Some might have been like a week or two ago now at this stage. You can see some of the results of this trade right here. If I can zoom in, I've already made over $140,000 on this position. This trade was made on Bybit, which is still the best exchange in the space as far as I'm concerned. Managed to pull over 140K in realized gains, and I'm still setting on probably more than this now, more than $17,000 in profits that I still haven't even closed yet. And by the way, this was only $100,000 position, so it's not like I put in 10 mil and now I'm just making 1%. Like, I literally more than doubled my money on this trade, way more than that. And it was off the exact same situation that we're in right now, which is that, we kind of fell down to a critical area of support, an area of support that we knew would be important because it was resistance before and it was support. And, I'm not going to go over this whole thing with you again. You already know the deal. And I took a long based off that, and we, rightfully we moved off very, very nicely. And I think we're in a similar situation now where, we're pretty close to these support levels, but again, I'm feeling like people are a little bit too scared. Now, here's the thing, is that if we do lose the 25K area, then that's a major setback, right? We already know the deal. If we lose the 25K area, then naturally, typically what we expect is if you lose an area of support up here, you're going to drop until you find the next area of support. And let's say the next area of support is around here. This is where you stop dropping, okay? So here's a really good example of that. We had a little bit of support over here. This is the 28,500 level. Actually, that's not accurate. This is $28,700 level. Clear resistance, a little bit more resistance around these areas, some clear support. As soon as we lose this level, bam, we fall flat and we're down to the 25K area. So we see the same thing playing out all the time. It happens in reverse as well, okay? We had a little bit of resistance like up around here. We can see that we had resistance because we literally had resistance, but we also found support at the same area, right? So I'm just going over the really basic things with you guys, and then as soon as we break this area, what do? We rise up and we find resistance at some higher places. We actually found resistance first up here, and this is a really good level to find resistance for Bitcoin, because if you look at this, it really just proves my point perfectly, is that when you break resistance, you go up to the next area of resistance. Equally, when you break support, you go down to the next area of support. So here we broke resistance, and where did the trend stop? Right here. This is the first time on the daily chart here that the market stopped trending up, and it happened right at a previous high, right at a previous consolidation point. We were stopping when we were trying to trade up. This was a ceiling. When we were trying to trade up here, this was more than a ceiling. This was much more vicious than that. So an obvious place for the market to stop. We break resistance, we rise to the next resistance, and it's the same thing on the way down. So that's why it's kind of bad, right? Like, you don't want to necessarily be at the floor, and you certainly don't want to be at the floor for a long time. One of the key things that I talked to you guys about in my recent video, it wasn't actually that recent anymore actually, is that, when you bounce off support, you really want to look at, like, okay, well, how are we bouncing off? Are we going to bounce off in a way where we stay up, or are we going to bounce in a way where, it's kind of like a bit of a shit bounce and we're just going to, roll over and crash again? And one of the easiest ways to tell what kind of bounce you're in is you simply look at how quick it is. This is pretty straightforward. If you're looking at how quick the bounce is, let's take this one right here. Bitcoin falls all the way down to 17,500, and look at how quickly it rebounds up. Literally the next day, it's trading as high as 20,700. Okay, which, like, in these price figures is like 15%, right? Let me make sure I got that right. About 18% up. At these kind of price figures here, it's a big move, especially just in one day. Over here even it's a little bit slower, but we go from a low of what is this, 18,600 roughly, up to a high of 22,000. That's a 20% pump, and it only happens within 8 days. So when you get bounces, and the bounces are quick, when they're snappy, when they take you high very quickly, when they start acting quickly, that's how you know that, you're probably not going to start collapsing below that area yet. But when you've got a situation like this, where, yeah, you got a quick bounce, but now you're right back down, and this time you're just kind of like, no one really knows what's going on, and then maybe a bit of a bounce, but you're back down to the same lows, that's danger. That is where you're in a dangerous place, okay? And actually what happened there, as we know very well, is, yes, we did have one final little rally, but we just spent too much time over here. We fucked around too much, and then we found out. And that's exactly what we could be looking at right now. So, this is the nuance of, like, yes, we haven't collapsed below support yet, but if we're setting ourselves up to collapse below support, then this is kind of what you're going to be looking for. So, I don't like this. As a bull, as somebody who still has a small amount of my long position open, I don't like seeing that, the price has fallen down to this area and it's just not recovering. That's not a good sign. There's no way I can interpret this as anything good for the market, because if we were going to get a real bounce, it would have looked a little bit like what we had last time. Typically, there are exceptions, and that's why trading is complicated, and that's why you don't risk all your money and stuff like that. We already know the deal here, but that is typically what we're going to be looking at. And so, this kind of muddies the waters a little bit, but again, if we're just trying to remain objective, if we're trying to remain relatively unbiased, I think the picture is pretty clear. We still haven't collapsed below our support level yet. And if we don't, then as long as we don't, then really what we're doing is we're just kind of trading sideways here. And what we're doing is we're trading sideways after we've already trended up off a major market low. Here's the deal. Here's what's actually going on in the market. If we really take that step back, if we really breathe and understand what's actually going on here, if we actually just, here's what I'm going to do. I've got a great idea for you guys. Did TradingView change their UI? Because I can't find what I wanted to use. Let me see if I can find it. Yeah, they did change their UI. That's not fair. Bars parent. This is what we're taking here. And we're just going to go ahead and extrapolate this exact price action, but I'm going to move it over here. I don't want you to pay attention to what happened before the low. So we're just going to use this, okay? And we're going to stay super, super unbiased on this. And I just want to make a point with you. What we're going to do is we're going to separate the market into a few distinct phases. We're going to separate it into uptrends and downtrends and uptrends and downtrends. There we go. Okay, and what we see all the time is that when you're trending up, eventually you will need a phase in the market where you trend down. You need to correct. It's a non-negotiable. If you want your trend to stay being a trend instead of being broken, you need to have corrections. And these corrections, they show up in two different ways. They show up as time-based corrections, or they show up as price-based corrections, okay? And what we saw over here with this example that I just gave you guys is a price-based correction. The price drops fairly quickly from up here down to here, and the scale isn't accurate because I've moved the bars, but that's basically what we're looking at. We're getting a price-based correction on this occasion here. Now, what did we get the next time? Well, we carried the uptrend, so that's good. We're trending up, okay, we expect that. Then we correct, okay, we expect that too, and then we recontinue the trend. So great, we're expecting all of this stuff. Nothing is catching us by surprise. What happens next? Next time we get both. Next time we're dropping with we're dropping with price, but it's also taken a long bloody time, so we're getting hit both ways. So cool, that's fine. Now we're trending up again, nothing really major happens. We're getting another time/price-based correction. We're dropping down heavy, and it's also taking time. So we're getting the same treatment here. That's what you see if you stay zoom in the whole time. But if you remove all of these lines and you look at this market from a more long-term perspective, what we're actually doing here, and we can actually visualize this on perhaps the 3-day chart. Okay, yeah, let's go on the weekly. Let's really zoom out. What we can actually see here is that since we hit this low down here at $17,000, it's been a near constant uptrend until we got to this high. And this high is the only significant kind of correction that Bitcoin has seen since we dropped down here. And now I want to ask you the question, what price did Bitcoin bottom out at? And what price did Bitcoin top out at? And if you do that very simple math, I'll do it for you. $15,000, thereabouts, roughly, up to roughly $31,000. It doubled, okay? It was a plus 100% gain. Bitcoin doubled. Now you tell me, all right, with your sober perspective on the market, you tell me, do you think a shitty correction is due? I'm not saying you want it. I'm not saying that it should happen or necessarily that it should happen or that we should expect it or anything like that. But do you think it makes sense that we get a long, shitty, painful kind of correction after the price doubles? Is that reasonable in a horrible macroeconomic climate? I'll tell you what, guys, if Bitcoin does get out, and I'm not saying it will, but if Bitcoin does get out of this and starts trending up or whatever, if it just doesn't crash down to 20K again for the rest of this year and it doesn't actually go down to 20K ever again, then this is actually going to look really obvious in hindsight. And the reason I'm saying it's going to look obvious in hindsight is quite straightforward. It's because at a time where everybody is scared shitless, at a time where inflation is getting ready for another leg and things are about to get crazy again, and that's a whole separate discussion, at a time where everything is shit in the world, unemployment's going up, just the wrong signs, Bitcoin isn't crashing. Bitcoin, the most volatile, most dangerous asset in the world, other than the shit coins that followed, isn't crashing. Bitcoin is actually holding its diamond hand support over here at 25K. To me, that says something, because as a trader and as an investor in these markets, what I really want to do is I want to read between these lines. Like I want to look at the chart, I want to take it at face value, yes, but I also want to read between the lines. I want to understand, what is Bitcoin doing within the context of the rest of the world? How is Bitcoin behaving here within the context of everything else going on in the world? That's a really important kind of question that I try to ask myself, because one of the things that you see is that if you really are in a bear market, then you're going to respond horribly to bad news, and you're not going to respond to good news. That's a pretty good kind of summary, and it's the opposite if you're in a bull market, right? Well, obviously we've had everything going against Bitcoin for quite some time now, but the worst thing that Bitcoin could do over the last 7 weeks, over the last nearly 2 months, basically more than that actually, I'm sorry, not 7 weeks, it was 8 weeks here. So basically, yeah, over the last 2 months, all Bitcoin could do was drop down by 20%. Are you really telling me Bitcoin's that weak? Do you know what I mean? So it's mixed signals right now, and that's why we're at an equilibrium. There's a really good argument on both sides. I'm not here trying to, make you make your own, to make you make a particular decision. That's your business. But I am here to give you the facts that I'm seeing and present them to you in as good of a way, I guess, as I can. I don't want to use particular words like unbiased, because I'm very biased. But I'm trying to present these facts to you in a as neutral of a way as I can. And let you make your own decisions here. Where and this is the thing. Is like, for me, it's neutral because I'm neutral too. Yes, I'm super biased. I'm in my long position and stuff like that too. But I fully acknowledge that the risks are here. I even told you guys in VIP about it when I made this post right here in 𝗬𝗢𝗥𝗙𝗚 VIP. It was actually forwarded. Oh, what have I done? It was actually forwarded inside of 𝗬𝗢𝗥𝗙𝗚 Gold right here. You can read that I've moved my stop loss up, so I'm still in this position, but I moved my stop loss, and I've also closed 50% of what remained in my trade for a phenomenal 219% profit. Absolutely stunning. Really, really beautiful execution on this trade right here. Now let me just find where. There we are. Yeah. And now we're back here. And the deal that I'm seeing is quite straightforward. Yes, there is a lot of risk, there is a lot of things to be worried about in this market, but there's also a lot that still stands in Bitcoin's favor. And one of the biggest things remains just the general kind of climate where money actually is. Let's ignore the news headlines. Let's actually look at what's going on. Somehow the dollar is rising, and the S&P 500 is rising, and Bitcoin is holding its ground. Things are just not as weak as everybody is leading you on to believe, and that's a really important note that I wanted to leave you guys with in this video. Now, I don't actually know. This is the thing. It's like, if we get a bounce, then great. If we get a bounce off from here, we've already had one bounce. It didn't quite work out. Typically when something like this is going to happen, then you are due for the opposite, and maybe it doesn't work, and you kind of go back to the average. That's typically what we see, right? You grab the liquidity up here, it doesn't work. You grab the liquidity down here, it doesn't work. You return to the middle. So that's probably, like right now, if I had to, really, really put my money on something, it'd probably be that the market does take another dive down. If it happens, it would probably stop me out of my position as well. That's okay. But if we do kind of continue to rise up here, we've still got the same area of resistance that we knew about, by the way, and it was perfect how it rejected Bitcoin. I didn't even bother making a video about this because it was exactly what I said would happen if Bitcoin moves up here. So I was like, there's no point in me even talking about this. You guys already knew what was going to happen. So it's, again, shout out to those of you that are actually watching this channel regularly. Again, it's going to be a case of just overcoming a shitload of resistance, basically, until Bitcoin can actually get to some nice, high, exciting places again. And of course, if we drop down, it's going to be a case of finding that next area of support. So, this really varies. This is going to depend on how you draw your lines and different things like that. But, here is one interpretation, which I think is pretty solid. First of all, it starts by telling you that actually we haven't even fallen down to the area of support yet. So take that as you may. But it does stretch all the way down to about 24.2, which is at 24.3, which is a pretty good kind of price area, for Bitcoin to find some bounces off. But then we've also got some, kind of more intricate levels of support down here at like 22.8. We've got 21.5, 21.4. These are all price areas that are critical, that have been critical for Bitcoin throughout the course of this year and even the latter half of last year. So really, really important price levels. These would be the kind of price areas that we expect Bitcoin to stop falling at if it starts to collapse now, that's probably where I'd expect it to stop, and then to potentially even drop a little bit lower. The lowest area of support that I'd see for Bitcoin before we get into a really bad situation is 20K. But what I think is really interesting, before we even start talking about lower price levels than that, is everybody's already discussing them. I mean, on Twitter, I'm hearing a lot of chatter about a 4,000, 12,000, whatever dollar Bitcoin and stuff like that. And, we're not even, Bitcoin can halve in value today and it still wouldn't be at $12,000. You know what I mean? Like, I think that we're having all of these discussions a little bit prematurely, and that's normal. That's an important note to keep in mind, because that's how things work in these markets. When you go down to support, the kind of areas where actually you should be getting a little bit more excited, a little bit more bullish, typically that's when people really lose their mind and really get scared. And that's just the nature. That's because, all these people, by the way, who are having these reactions, maybe it's you as well. Typically it just comes down to the fact that you're trading with too much money. That's typically what it is. It may or may not be you, but typically when people are trading with too much money, they just get shit scared over nothing all the time. And that's a really, really important thing to keep in mind, because if that is you, then your solution is quite, we talk about like there's no, everyone says there's no overnight fix. There are many, many overnight fixes to being a bad trader. And I talk about them inside of the VIP group that I'm running here, inside of the 𝗬𝗙𝗥𝗙𝗚𝗏 Academy courses that you get access to when you follow these links in the description down below. This is exactly what I go over. The fact is, there are actually most issues that traders face are overnight fixes. That's the truth. And the reason for that is because you just have to stop doing stupid shit. You have to stop putting too much money in. You have to stop trading when you feel like you want revenge from a bad trade. You have to, there's just things that, like, it's not like it's going to take you 10 days or 10 weeks or 10 months to implement this. Just stop. That's it. And you can choose to let that take you a year, or you can choose to let that be right now. But that's just the nature of these markets. If you want to dive deeper into that, come reach out. We'll talk about it. Of course, while you are down there, guys, you're getting crazy offers from these exchanges with their links in the description down below here. It's absolutely insane. Again, with BingX being one of the best offers right now, over $100,000 in bonuses available to you guys. And it is, again, a no KYC exchange, which is really, really cool. There's not that many of them out there anymore. So definitely do go ahead and check it out if you think that you'd be interested. You've got access to stocks like Apple, Tesla, Amazon, and stuff like that. I'm going to start talking to you guys more about the trades I want to make in those markets as well, because again, like, the fact that I have access to it as well is super exciting. I'm going to be using BingX for that stuff. PrimeXBT also has similar things, so maybe that's your thing. But Bybit, again, as far as crypto exchanges go, they remain undefeated. They remain at the very top of the mountain, and no one's taking them off right now. So really, really cool to see indeed. Go ahead and check them out as well. You're getting up to $30,000 in bonuses on Bybit. So very, very cool indeed. All right, guys, I am going to be heading off with that one. With this one, it has been my first video in a while. So thank you guys for your patience. If you've been waiting for my channel, if you haven't been waiting for my channel, then okay. And go ahead and check me out on Twitter and all that good stuff with the links in the description down below. Also, the 𝗬𝗙𝗥𝗙𝗚𝗏 Telegram channel is great, and there are some cool giveaways we're running on there at the moment as well. So go ahead and check that out if that's your thing. And with that, I'll see you all in the next one. Cheers.